Welcome back to our In the Pages series with Monte Jackel. We're focusing on his article, The Hopefully Upcoming 2025 Tax Reform Debate. Now, if you haven't already done so, please make sure you check out the other videos in this series. Well, moving on, next I wanted to talk about the partnership area. And you mentioned, I think, that Senator Wyden from the Senate Finance Committee had a relevant proposal a few years ago. Do you think we just start from square one when it comes to approaching partnerships, or do we take what Senator Wyden put out there a few years ago and then use that as the starting point?
First, just as a way of matter, a little background. The IRS has gotten additional funding. They're trying to claw that back, but it's got some additional funding. They've advertised hiring more agents. They've advertised setting up a separate unit within LB&I to audit large partnerships or complex partnerships, whatever those are, and high wealth individuals. They've also talked about increasing the training of the IRS agents. The problem there is that the partnership area has been so ignored by the IRS and Treasury over the past 3, 4, 5 decades. I mean, you can almost go back to the Internal Revenue Code of 54. And then the last time you saw any meaningful legislative activity was 1984 as a general proposition. So I don't think, having worked at the Treasury and worked at the IRS a couple of times, in fact, I don't see that even with a very concentrated effort and that to hire more people, qualified people, including raising the pay, because the current pay, even with the GS scale, is not sufficient. It is not sufficient to bring in the types of qualified people you would need to combat and stand toe-to-toe with those in the outside partnership tax bar. There's just a huge, huge knowledge gap. And thank God they're starting to recognize that now, but it would have to take at least a decade, you would figure, to correct that imbalance. But the main problem with partnership tax law is that there are a lot of gray areas. In fact, almost every issue in Subchapter K is gray, could go one way or the other way. And with very smart people, clever people working on these issues, to get a clear resolution of it by an audit alone would probably fail in most cases.
All right, Monty, let me ask you this. Could this problem be solved by Congress?
There are issues and anomalies and ambiguities and loopholes that could be fixed with legislation. And the senators draft in September 2021, which was intended as a discussion draft, even though it didn't get much discussion from the outside bar, mostly for reasons dealing with either not wanting the law to change or impacting an area where you have a vested economic interest in keeping the law as is. But it was a good start in terms of, to generate comment. But it was very disappointing. I mean, I spent a fair amount of time reviewing those provisions, putting what I thought in print, but no one really, with limited exceptions, no one was really coming in and saying, well, what about this and what about this? And you could improve this and you can improve that. Instead of coming from the approach of, this is a good start when let's talk about this, and this. Most of the comments, which were informal and not in print, as I understand it, just said the thing stinks, let it go away. And again, that type of attitude is not going to generate much tax reform.
All right, Monte. Partnership's a very complicated area. What is it going to take to get this reform going?
Any system reforming partnerships would need, at least I've come to the conclusion, you would need a two-tiered system, which is similar to what Georgian and David Jackel, when they worked on the last ALI tax project in 1999, ended up recommending a two-tiered system, a simplified sub-K version for smaller partnerships, and then for larger ones, a more complex set of rules. And I really believe that is going to be necessary to get comprehensive partnership reform passed, because it is just true, it's clearly true that for smaller partnerships, various proposals in the Wyden package, like mandatory remedial allocations or mandatory reverse 704C, revaluations, changing special basis rules to be more targeted, putting constraints on how items can be allocated under Section 704, that the burden on the small and medium-sized partnerships, where the advisors are not, as you would expect, as schooled in partnership tax law as the larger Big Four and large law firms are. The only way you can target the needed reforms and not overly burden many of the smaller entities is to have a two-tier system where you will draw the line. Like the simplified ones could keep whatever the law is today because they're not really exploring the outer boundaries of it, whereas those in the large firms, they are. And I'm not saying that the positions that are taken in large accounting firms, large law firms, are wrong. It's just that there's so many gray areas that depending upon your level of comfort and in which particular issue it is, it's not going to be that difficult to come up with a position if you're in a large firm on an issue. And then the most you're gambling with, gambling in quotation marks, would be tax and interest, not penalties. Because how could you, in the cases of, most of the cases of tax gap that I'm thinking of addressing are not those where you're hiding money or you're not filing. Those are the cases I'm focused on, or you are filing. And it's the underreporting of tax that's at issue based on positions taken. And so something needs to be done. And it's going to be a hard fight because there's a lot of lobbying going on, and will go on to stop it if it comes back again.
That's it for this part of the discussion. Please keep an eye out for the next part of this series with Monte Jackel. Goodbye, and thanks for watching. Want more like this? Subscribe for more tax videos. Special thanks to our executive producers, Jasper Smith and Paige Jones, showrunner and video editor, Jordan Parrish, and assistant video editor, Chris Trigo.